සෙම් ප්‍රතිශාවක් හැදීගෙන එනකොටම නිසක ප්‍රතිකාරය කලින්ම සමහන්.
The provisions of the new Inland Revenue Act, named 2017 number 24, will come into effect from tomorrow, bringing amendments to tax policies across various sectors. A significant change that comes under this act is the taxation dependent on the level of income of employees. Accordingly, employees with a monthly salary of 100,000 rupees will be exempt from tax. Further down the line, a 4% tax will be levied on a monthly salary from 100,000 rupees to 150,000 rupees, while the tax between 150,000 rupees to 200,000 rupees will be 8%. Employees earning between 200,000 to 250,000 rupees will be levied a 12% tax, while a 16% tax will be levied to salaries between 250,000 to 300,000 rupees. Those earning between 300,000 to 350,000 rupees a month will be subjected to a 20% tax, and sums above that mark will be taxed 24%. Employee salaries, commissions, overtime pay, transport and other allowances, as well as various other similar payments come under the said tax. However, the Employees' Provident Fund and pensions are not included from these taxes. Under the new taxation system, a 5% tax will be imposed on the interest of the savings, including of those employed abroad. In addition, the profit generated from the sale of houses, land or vehicles will also be taxed. Tax on capital gains arising on investment assets has been reintroduced at 10%. However, the base value or the cost for determining capital gains is the market value of the asset as at 30th of September in 2017. However, if a house is sold following 3 or more years of residence immediately prior to the sale of the property, the profit gained will be exempt from taxation. According to the Inland Revenue Department, this tax is not related to selling shares for higher prices in the share market. In the meantime, the VAT imposed on various goods bought by foreigners will be returned to them at the airport when they leave the country with effect from the 1st of July. Moreover, as key changes done to the bill, activities qualifying for concession under export category have been widened, while incentives have been granted to business engaged in renewable energy. Additionally, investment incentives have been restricted to investments in new businesses, and incentives have also been provided in addition to depreciation allowances. Furthermore, incentives have been provided to investments in state-owned businesses. According to the new act, income accruing to an individual on services provided and utilized outside Sri Lanka would not be taxable up to a maximum of 15 million rupees, while the withholding tax on the interest applicable to corporate has been reduced from 14% to 5%, with tax credit being now available on same. Furthermore, as principal features of the new act, the capital allowance rates have been revised, while the enhanced depreciation has been afforded to investments in addition to depreciation allowance. Moreover, definition of dividend has been revised to include share purchases and capital reduction, while the rate of tax applicable to dividends and certain interest has been increased from 10% to 14%. Accordingly, tax rates are to be revised and a 3-year tax structure has been introduced, and the deemed dividend tax has been withdrawn. Under the new act, permanent establishment concept has been introduced to ascertain the business income of a non-resident. Furthermore, the Department of Inland Revenue has been given enhanced powers to relook at transactions, especially those between associated persons. In the meantime, when First at 9 contacted tax consultant N.R. Gajendran to get his views on the Inland Revenue Act, due to come into effect tomorrow, he highlighted it as entering uncharted waters.
The new law, there were needs for some correction and improvements. Those things have not come into place. Even the Department of Inland Revenue has not given the guideline yet. Many stakeholders have suggested certain changes, amendments. I think even the policymakers may be accepting many of them, but they have still not given effect to that. The assurance or the thought is that they will be making those corrections and improvement that is required. So we are going into a new uncharted territory. So there are many challenges that we have to face going forward.
He went on to speak about the differences between the new Inland Revenue Act and the old one.
The fundamental differences between the two laws is that earlier is a principle-based law and new one is a rule-based law. The other thing is emissions have been taken away under the new law. Rates have been increased under the new law. All these things could have been done under the old law. but they have gone into a completely new law. It has been based on Derana. Certain modifications has been done to that law. Principles of taxation is different. Earlier we had many sources of income. We have 3 sources of income now. The whole purpose of the new law is to broad-base the tax and increase the revenue. But whether that desired goal, that is increasing the proportion of the income tax compared to the indirect tax, now it's less than 20% income tax compared to the indirect tax. They want to go up to 40%. Whether this law will be is a huge challenge.
In the meantime, former Minister of Finance Ravi Karunanayake too expressed views on the new tax reforms at a media briefing held in Colombo today.
ඒ අලුත් පාතු පන්තක් ගෙනව එක අවශ්‍ය රටට ඒක ඇත්ත වශයෙන්ම මගේ මුදල් අමාත්‍යාංශ කාලේ අපි පටන් ගත්ත දෙයක්. නමුත් එදා තිබ්බ එකයි අද වෙලා තියෙන එකයි සම්පූර්ණ වෙනස්. ඒක තමයි තියෙන ප්‍රශ්නේ. මොකද මේක ජාත්‍යන්තර මූල්‍ය අරමුදලේ අදහසක්. නමුත් අපි ශ්‍රී ලංකයන් වශයෙන් සුද්ධෝ කියන දේ එහෙම ගන්න ඕනේ නැහැ. ඒ අනවශ්‍ය දේවල් තමයි අද තියෙන ප්‍රශ්නේ. ගෙවල් වලට 115ක බදු ලැබෙනවා. බදු ගන්නවා. මේ වගේ කර්මාන්ත රටේ ශීඝ්‍රයෙන් සංවර්ධනය වෙන අවස්ථාවක 115 ගෙනලා දාන එක ඉතාමත් අමාරුයි. ඉතින් මේවා තමයි ඉදිරි දැක්මක් නැතුව ඇති වෙලා තියෙන දේ.